Hey, everybody. Welcome to this episode of Founders on Finance, where we interview founders building interesting companies and learn how they view finance, from raising rounds to managing cash. Today, we've got Tobias Heaslip of Trading TV. Super pumped to talk to him. I find what he's building really exciting. If you like TikTok, Twitch, YouTube, or Wall Street bets, you'll definitely find what he's building interesting as well. Tobias, thanks for spending some time with me today. Why don't you start off by giving everybody a kind of brief intro about who you are and what you're working on?
Yeah, well, so first off, thank you very much for having me. It's a pleasure to be here.
Thank you as well.
Yes, as you mentioned, I'm Tobias Francis. I'm the founder and CEO of Trading TV. We are the world's first tradable live stream and immersive chat platform for traders and financial content creators. The easiest way to envision phase one of our product is as a fintech love child of Twitch and Discord meets Robinhood. And the concept is simple yet transformative for the industry. We have creators come on the platform. They create content via live stream, video on demand, and immersive chat. We take a asset class agnostic approach. So our belief is that everything is an asset and everyone is a trader. So from a content perspective, we have creators that are making content that cover everything from stocks and options to crypto to the exciting new alt space. So NFTs, trading cards, rare sneakers. Fans, followers, and audiences can then buy and sell those underlying assets directly from the live stream.
Fantastic. I love it. I know you talked previously. It's something I thought should have already been created. Let's take a step back, talk about your background a little bit. Your journey is kind of similar to mine a little bit in that we were both on Wall Street, made the flip to tech. So why don't you just give everybody a little background on what you're actually doing on the street?
Yeah, we made it out of the wars, so to speak. Definitely don't miss it. So I started my career off as an intern at Goldman Sachs. I then went to Morgan Stanley. Was an amazing time to be a part of Morgan Stanley because it was sort of the golden age of their investment banking franchise as it relates to TMT deals, and social media was just becoming an investable asset class. So I was one of the only young people that was on the desk trading TMT at the time, and actually used the products of the companies that we were taking public. So they asked me to become the resident social media expert, and was lucky enough to be at the firm for a lot of the early deal flow and Groupon, Zynga, Pandora, Snapchat, Twitter, all that good stuff. Went from there to a hedge fund that was at the time called Oxif, since changed their name to Sculptor, where I was responsible for social media primarily, but then also fintech, consumer-oriented internet and payments. Then about 5 years ago, I went to Barclays to run the technology, media, and telecom group on the institutional cash equities desk there. And that was my last job before waking up with the idea for Trading TV and deciding to make the leap and never looking back.
Right. Well, that's kind of my next question, right? Everybody knows you can make boatloads of dough on Wall Street. So for you to kind of think about, let's leave that world, right? And I know there's multiple reasons to do so, but to leave that world where it could be very lucrative, what's the thought process of going from there to saying, hey, I want to become a founder, going down this rocky entrepreneurial path of starting your own company?
Yeah. So, I mean, it sounds a little bit disingenuous, but money was really never a motivating factor for me. I was lucky enough to be very successful in my Wall Street career from a very young age, and just really learned that, cash is not going to make you happy. Obviously, there's a lot of benefits to it, but I really wanted to build something that I could be proud of, that I could, show the world. And when you're sitting on a trading desk, you're making a lot of money, but you're also not really building anything. You're just moving numbers around from one side of the ledger to the other. And I'd always had this entrepreneurial zeal. Like I had, a quasi startup in college that didn't go anywhere, but I was always trying to do something within these larger organizations. And they're just not set up for entrepreneurship. I mean, these people are very tied and true in their methods. They think they have the answers to every question under the sun. When you try to propose, some new idea, it gets shot down very quickly and you get told to shut up and sit back down. Okay, great. Well, I have bigger ideas that I actually wanted to see come to life. And so the easiest way to do that is to become a founder, become an entrepreneur, and build the companies yourself and then hire a bunch of people.
Yeah, preaching to the choir, man. I absolutely love it. I'm hoping there is one of these, right? Aha moments. I envision you probably, because you kind of touched on it a little bit, sitting in one of those horrendous Wall Street Monday morning meetings, pitching like your greatest trade or investment idea for the week. Hopefully you don't get shut down. Did you have an aha moment? Do you remember it? Or if you did, what was that?
So it was a series of aha moments that were really kind of like gradual slaps in the face until I basically got knocked out by the idea. So what really happens when you're a trader is you're looking for the next big secular trend. So if you think about SaaS software, for example, in the late 2009, 2010 till now, you didn't really have to pick individual SaaS stocks that did particularly well. You could have just
Right.
kind of taken a group approach, birdshot, basket the entire thing, and most of them worked. So I wanted to find the next big secular trend in 2020 and beyond. And I was really diving deep into what that was going to be. And there was two of them that I felt very strongly and highly convicted about. And I was willing to bet my career on it. So the first was the emergence of the creator economy. And what that is basically just people that want to pursue their passions as their full-time career. And that's something I feel extremely convicted and strong about myself. I think it would cure a lot of the sort of mental illness epidemics that we have in the country, and just depression and sadness. If people could figure out a way to just do what they actually love to do on a daily basis and make a living doing it, the world would be a better place. So that was the first one. The second one was the emergence of retail trading, and really people just taking more ownership of their financial well-being, because again, they don't want to be caught in this 30-year, 40-year, 50-year rat race where they're showing up to a job they hate every single day just to try to, make ends meet, and living, their life, they're miserable Monday through Friday just so they can get to the bar on Friday night or Saturday or whatever, and then go back to their depressing existence on Mondays. So those two things converging were really what I thought was going to be a once in a lifetime opportunity, and the opportunity to build a segment defining company, which is what we hope Trading TV will become.
Right. I love it, because as we said right before we came on here, most people, as everybody's working for the weekend, much like the song from Loverboy, if you've ever heard it. If not, you can check it out on Spotify. But let's dig into like Trading TV a little bit now. Yep. I don't want to sound like a VC, but there is a long history in stock trading and investing of paid content, newsletters, content chat rooms, research services. So why is now the time for Trading TV?
Well, so I think it kind of goes back to what we just talked about with the emergence of the creator economy. And one of the things that, we're really focused on is how these big institutions have the lowest level of trust from the mainstream population since we've been taking measured data on it. Meaning our parents' generation was all about, you got to have a big shiny brand name on the side of the building or on your business card in order to have any sort of credibility and validity. And then we went through the financial crisis. And on the back end of that, maybe our parents' generation didn't feel that different, but their kids did. They felt like, the Goldman Sachses of the world and the Fidelities and the Charles Schwabs and all the rest of these people were in some way, shape, or form trying to rig the game. And that's at the exact same time, I think personally, non-coincidentally, that we started to see the emergence of crypto and sort of these alternative sort of DeFi projects, decentralization, and all the rest of that stuff. So now who are the people that actually own the domain knowledge in the asset classes that the younger millennial and Gen Z generations actually care about? It's not the institutions, it's the individuals. So we wanted to create a platform to be able to empower that, to be able to give these people the opportunity to not only build an audience, but build a business, and to do so by educating the masses in the things which they have deep domain industry expertise and knowledge in.
Right. So effectively using the growth in technology to give people a voice and actually spread their knowledge and make it effective for everybody else outside of, if you're not a $5 million account with Goldman Sachs, you're not going to get anything. But people below that now can go to people that have domain experience and get some value.
Yeah. Well, not only that, but, Goldman Sachs doesn't own the industry knowledge of crypto or NFTs or trading cards or any of these tokens that are out there that are trading. Like, they own fixed income and interest rate derivatives, and to a certain degree, but not really, equities. But everything is moving away from that, right? So you don't need to be one of these people that has a gigantic private wealth management account, because even if you do, they don't have the people in those buildings that actually know what they're doing with regard to these new wave products. So that is, that's a really interesting flip and change in the overall dynamic of the industry from a structural standpoint, and something that I think is going to have reverberations that none of us have really been able to comprehend or consider to this point.
Yeah, well, you can see them scrambling, right? All the big name ABC, XYZ companies are scrambling now to create crypto desks, crypto research teams, et cetera, right? So they're probably behind the 8 ball. So we'll see how they last in that space. Next question, right? Every company's got to have an unfair advantage to kind of succeed. What's your opinion that yours is going to be to kind of propel you forward?
Yeah, so I think it's really two things. One, we have one of the most innovative financial technologies that's come to market over the course of the last 10 or 15 years. I mean, people have been doing a lot of stuff that probably from an engineering standpoint is more difficult as relates to crypto or something like that. But
Mhm.
in terms of a user experience, we invented tradable live streaming. So the ability to actually come onto our platform, watch someone who has this expertise, who has this knowledge, either trade that underlying asset or talk about it, and then to be able to click on a button and buy or sell the underlying asset in real time is a game-changing user experience that I truly
Mhm.
believe is going to revolutionize trading and investing in the digital age. So that's the first thing. The second thing is we have the luxury of being the first company that can build these things specifically for that's building the platform specifically for the financial content creator, trader
Mhm.
use case. Meaning, unlike a lot of the companies who we compete with, we're not focused on gamers or on beauty and travel influencers. And we can change the entire platform like that to be able to adhere to the feedback that we're getting from people who want to, who just want to trade, who just want to buy and sell these underlying assets. And that's a huge, huge advantage because
Mhm.
at the end of the day, it's all about, catering to and providing that specified value for that specific user. And it's just very difficult to do when you have a horizontal platform.
Sure, sure. I'm going to build off of that because I think it's a nice way to keep going another level higher, right? Competition. Let's talk about
Yeah,
them. You got Discord. They got a toe in the space. People love their Discord
sure.
chat rooms. You got
Yeah,
YouTube. Tons of people posting videos. My personal opinion on those guys and gals is they look like scammers, or as I like to call them, hucksters. Uh,
yeah,
Telegram was on fire during the ICO boom, and then
yeah.
obviously Wall Street Bets on Reddit turned into a titan. So that's pretty giant companies there a little bit. How are you going to get in there and make your elbows sharp and start to stand out and make sure that you're the go-to? Trading TV is the go-to for this type of information.
Yeah, so I think the first thing for me is that competition is a good thing. The only way to avoid competition is to avoid good ideas. And we're not in the business of avoiding good ideas. So we can expect there to be competition and a lot of it. But again, we're building this. We're the first company that's built this specifically for our users, which are financial content creators, traders, investing enthusiasts. The rest of those platforms have been used because a trading TV didn't exist yet. And we know this because we didn't just start coding this thing, based on our own ideas. Like we went out into the market before we had even written a line of code, and we interviewed 1,000 people, and we got the feedback from it, and we understood where the gaps were. And it became very obvious, like, okay, yeah, here are the gaps in Discord. Well, why? Because Discord has whatever they have now, 100 million users, the vast majority of which aren't using it for trading. So Discord's not going
Right.
to augment their entire platform to be able to cater to what they view as like a very niche use case. So if you think about it from sort of two different sides, on the first side, you've got the horizontal platforms, the YouTubes, the TikToks, the Instagrams, Twitters. And those platforms are great for building your initial audience, but
Yep.
it's very tough to be able to get discovered. So it takes a very long time. We've obviously seen a material shift in how some of these platforms view financial content. So if you're creating crypto content, for example, you can actually get kicked off or shadow banned, or the
Exactly.
algorithm demotes the probability of your virality, and so that's a problem. So we're seeing a big issue associated with that. And it's very difficult to be able to monetize because the platforms have been built on the ideology that creators give us content for free. We sell that content to advertisers, and
Mhm.
then creators are left to go and get their own sponsorship deals or however else they monetize. But that's not our problem. So that obviously is something I wholeheartedly disagree with. Our platform is creator first, and we want to give them ample revenue opportunities, more than double what anyone else is offering. On the other side, you've got the fintech players, like Coinbase, Robinhood, those guys. And they haven't been a content focused platform. So if I'm a content creator, if I'm a financial content creator and I want to go and I want to build an audience on even the publics of the world, right, which have
Mhm.
more of a social media-esque feel to them, there's still no way for me to monetize. So
Right.
the only way that these people were previously making money from those platforms is from affiliate marketing, which is now largely banned on most platforms. So now here we are
100%.
in this environment that looks like it's crazy competitive. But when you look in between those two verticals, there's an ocean of opportunity, which TTV is currently swimming in.
Yeah, I love it because you hit on a ton of key things there, like shadow banning, all that other type of stuff. Like you're literally giving an audience an arena to go ahead and become beneficial for themselves and other people, whereas they don't have to play by the rules of the larger public companies, if you will.
Yeah. I mean, I think you definitely need to create, I mean, the first thing is telling a content creator, hey, this platform is specifically for you and the audiences that want to come and watch you. So outside of a violation of our terms and conditions, or, you know, something that's clearly egregious, right? Like a pump and dump scheme or some sort of nefarious activity, like trading on material, non-public information, you're never going to wake up. You will never wake up to, hey, a community violation, we're kicking you off the platform. Never going to happen. And I think a lot of people, you know, looking from the outside at what content creators do, they don't really appreciate how much work goes into it. I mean, you know, because you are creating content on a very frequent basis, but this shit is work, you know?
Yeah,
Like
absolutely.
It's not just the production of the actual content itself, but then there's the editing side of it. There's the marketing side of it. There's the business side. And I do want to take a moment to kind of touch on that, because we're building a bunch of back end tools, which are going to be, you know, so great that I think we could probably end up white labeling them, but to help creators manage the business element on trading TV. But it's important for these people to understand how much work goes into it. So waking up one day and having the rug pulled out from under you is an unacceptable outcome. And for us, it's very, you know, it's lucky and fortuitous for us right now that we're coming into the world at the exact time that people are realizing, the content creators are realizing how vulnerable they are by being levered to just one platform. And so they want to diversify across many platforms. And you know, that TTV is a home for that, or a refuge.
Yeah, I love it because I've personally known people that have participated and tried to run a creator business on XYZ platforms, and they've absolutely had exactly what you just mentioned happen to them. They wake up, and you even see it on the news, right? Boom, you get blocked out, you're done, and all your income, if you will, just vaporizes just like that. So
Totally.
yeah.
I mean, we just saw the biggest freak out of all time, which was, you know, OnlyFans. Making the pivot and then the pivot. But it does go to show you, you know, like so many people that are out there, especially the creators, most of the creators, let's be honest, on OnlyFans are creating content that has, you know, that has an adult nature to it. So like if one of those platforms makes a pivot in that direction, your entire livelihood falls apart overnight. Like that can't be acceptable, right? Like that's no way to run a business, or, you know, or to run your own personal life. So for financial content creators, they can rest assured that as long as they're not doing anything malicious to the audience and they're adhering by our terms and conditions and our community guidelines, that they'll always have a home on Trading TV.
Perfect. Love to hear it. It's kind of part of the people thing, man. Part of the people. I love it.
It's about community.
Perfect. Well, I could talk about it because it's on the internet. I want to personally congratulate you. You just closed your round. So that's awesome. Big ups to you. Question on that. You know, your background as being on Wall Street, do you think that helps you during the raise process? And if so, do you have any examples that you can kind of touch on where you could say, you know, this is how it's helped me, so people listening to this that are founders looking to raise capital themselves can maybe leverage your experience a little bit?
Absolutely. So two-part question. The first part was, did my experience on Wall Street help me? And the answer is absolutely. It didn't help me in the pitch process, but it helped me in my network is extremely robust. So, you know, I was actually taking a bunch of notes on this, and I hope to be able to turn it into, I don't know if it's a book or like, you know, something I'm going to give away for free, just to be able to teach young entrepreneurs, because I went through this and I had way more financial resources than the average founder does, way more connections, and I still had no idea what to do. And it was a bit of a shit show in the beginning. But the first thing about it is you need to realize when you're approaching venture capital, what VCs are actually looking for, right? Like they're looking for ideas that have monumental, out of the world potential, right? And you have to approach the pitch that way. You know, you kind of have to be like a little bit of this hip hop persona, like I'm the greatest in the world even before you know you are, sort of thing. And like this idea is a massive, massive game-changing, world-changing idea. But pitch it in a way that people aren't going to be like, yo, you're a crazy person, get out of my office. But when you do the seed round, it's always, team first. So in my case, I was a solo founder, but I had a unique background. I'm one of the only fintech entrepreneurs that actually spent over a decade as a trader on an institutional desk and then left to go and build a fintech company. But no matter what you're doing in the seed stage, it's always going to be either founder or team is going to be the most important decision factor. The second is the market that you're attacking. So how big is this market? And is that market in and of itself growing? So is it right. A market that's big and that's getting bigger? Or is it a market that's big but shrinking? And you need to understand those dynamics and how your company is solving the problem within that market. And then the third is actually the product. So the least important element of the pitch initially is going to be the product. And the reason for that is if you have a smart founder or a smart team and they're attacking a great market, the product will come. You have to be willing to listen to customers.
Sure. And
you have to be willing to totally iterate or pivot from your idea. But if you have a great team and it's a great market or a growing market, you'll be able to figure out the product. So I think if you focus on those things in that order, you're going to be all right.
Love it. Summation: swagger, TAM, and then product.
Yeah, exactly. Bring the swag, man. Bring the swag.
Right. Make sure they know who they're messing with. I love it. Yeah. So next thing, you got the money in the bank. You've got background as a investor / trader, etc. Does that dictate how you're going to manage it or use it? So meaning, are you going to take the bootstrap mindset, incremental gains slowly over time? Or are you going to be confident enough to say, hey, this is starting to work, I'm going right back to the market, getting investor capital coming in, throwing some money onto the fire to accelerate growth? How does your background kind of make you think about that and using it?
I definitely take a bit of a more aggressive approach because we're operating in markets that are extremely fast paced and changing rapidly. And I feel like, you kind of have to get to where you're going and be aggressive in terms of finding that product market fit. So, we're putting a product out this year that we think is pretty close to the product market fit that we're going to have long term, but there's always a possibility that one element of it is going to resonate and other pieces won't. So, 3 main components of it: the streaming component, the chatting component, and the trade component. Not almost every single company that's come before us is focused on one of those verticals, right? So there's a possibility that we may have to iterate or drop off from one of those particular feature sets. But no, my approach is get to where you're going, put the product out in the market, hire the best people. Like that's really what the primary use of capital is. I mean,
sure.
I've said it on other shows, but it's the bane of a founder's existence is always finding the best engineers that are capable of actually turning your words into product that people can like type on or click. I just get so frustrated. I'm like, why can't I just say it and then it appears? It's not quite that easy. But that's really what the primary use of capital is just building up the A team around me.
Right. Again, it goes to your three steps: swagger, team, TAM, and product. Exactly. Yeah. Well, cool, Ben. We're coming up to 25-minute mark. I don't want to take up too much more of your time here. Why don't you let everybody know where they can connect with you? Trading TV website, email, socials, anywhere you want somebody to be able to connect with you.
Yes, I think the best place from a professional standpoint to be able to find me is on LinkedIn. I do check all my DMs on LinkedIn. It's been a little bit wild lately, but don't worry, I will definitely respond to you. And then I just got on Twitter. So yeah. So it's at Tobias Francis on Twitter. Hit me up. I'm trying to build up my audience there. So more than happy to ping back and forth on Twitter if you're on that platform.
Well, fantastic for that. Cause I'll definitely reach out to you as soon as we're done here and see what type of stuff you're putting out there. Right before I let you go, then I want to give you the opportunity for a final comment. Give something for everybody out there to kind of think about or talk about your business again. Whatever you want to do. Final comment for you, man.
Yeah, I'm really excited to be building the future of fintech and the creator economy. looking to partner with anybody who's smart and hungry, even if you're a competitor. So please reach out. I'm all about, like I said, community. I'm all about partnership. I'm all about growing and climbing this mountain together. So I'm here as a resource to anybody. Please do not hesitate to reach out. I'm always here to help. That's been how I've gotten to where I've gotten to right now, is other people that have just been, hey, let's sit down, let's have a coffee. Let me tell you where you're doing right. Let me tell you what you're doing wrong. So yeah, that would really be the message I'd like to end on, is let's do this together.
That's fantastic. All about inclusion and making sure everybody can grow and be successful, even as a team or as a group. That's fantastic. Perfect way to end it. How I'd like to say my final comment is, if you're a content creator that kind of leans into trading or investing, or if you're somebody that actually uses that content for inspiration, definitely check out Trading TV. I'm certainly going to get on the wait list. I might even start rubbing you a little bit to see if I can become a content creator. We'll see how that goes.
We'd love to have you. We'd love to have you.
Well, that would be me throwing back to my old institutional days. But we'll have to see if I want to kind of do that and jump back in there. The replay of this is going to be on the Interprime YouTube channel, also Spotify. I'll break down track listings to all your questions. Also, any of the links that you mentioned, including obviously the contact stuff there. And overall, man, congrats on your raise. I love what you're building. I'm glad you're doing it, because I thought about doing it 10 years ago. So love seeing somebody getting after it. So much love to you. Thanks for being on the show. We'll do this again in a couple months or so as you get rolling forward. And thanks
absolutely.
everybody for listening, man.
Thank you so much for having me. Really, really appreciate it.
Thanks, Tobias. Talk to you soon.
Bye.
Bye.